The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Good morning and welcome to this Gold Money Podcast on Wednesday, January the 2nd, 2013. And may I take this opportunity to wish you all a happy and prosperous new year. This morning I'm speaking to Dr. Thorsten Polleit, who is the Chief Economist for Degussa Gold Handel in Germany, and for 12 years until April this year, the Chief German Economist for Barclays Capital. Professor Polleit also lectures in economics at the Frankfurt School of Finance and Management and the Universities of Bayreuth and Duisburg-Essen. In a recent speech, he asked the question, what do bankers know about money and banking? And I thought it would be interesting to discover more. So, frohes neues Jahr, Herr Professor Polleit.
Happy New Year, Andy. Thank you very much for the invitation.
Now, before we get going with the main part of the interview, as an Austrian economist, I've never heard of many Austrian economists in the world of high international finance. Are you lonely there as an Austrian economist, or are there more Austrians in banking than we realise?
Well, it's hard to say. I think there are a few Austrians here and there, but in general, it's fair to say that the Austrians are still actually a minority group in the field of economics. But in recent years, I would say there's a strongly growing interest in the works of the Austrian School of Economics, in particular driven by the latest financial and economic crisis. And I would say the reason is obvious. Mainstream economics did neither foresee the approaching crisis, nor does it offer any convincing remedies for solving the malaise. And so in contrast, the Austrians offer an economically sound theory for explaining the root cause of the crisis. And on top of that, the Austrians also are putting forward solutions. And this clearly plays into the hands of the Austrians these days.
Now, one of these solutions that they won't be so keen about is the part of your speech. Getting back to your speech, you believe in Mises' claim that money arises spontaneously from the free market and that then banking then arises as two businesses. One is warehousing money, where people pay money to store their gold or their silver or their free market money. And the other business is the much riskier business of investment banking. Now, in a free market, these two businesses would tend to be separated, but with bankers, they tend to get together with government and then bring these two businesses together. So when you put your money into a bank, it becomes theirs, and they then lend it out riskily with governments backing them with central banking. The other thing you think is that the banks and the governments get together to create fiat money so they can create money out of fresh air, and that this then leads towards what you've called collective corruption. This collective corruption then leads directly towards hyperinflation. Can you say why and how this collective corruption arises, and why does it always lead towards hyperinflation?
The talk I gave was driven by my goal to analyze the question which was actually put forward by Professor Hans Hermann Hoppe. What do bankers know about banking and money? And I try to review these questions. You know, the talk is basically rooted in praxeology, and this is the kind of reconstruction of economics as put forward by Ludwig von Mises. According to this type of thinking, you would approach the question as follows. Democracy means majority rule. The majority of the people decide, so to speak, who will serve as the temporary caretaker of public ownership of government. And the average voter will, of course, support those politicians who are expected, and rightly or wrongly, to improve the voter's economic situation. A voter has every economic incentive to act in this way, irrespective of the fact that the income he may obtain in this way results from expropriating fellow citizens. So the caretaker of public ownership of governments or politicians, in turn, has an incentive to secure the majority of the voters. He will favor policies of expropriating the typically few high-income producers to the benefit of the typically large group of less productive or non-productive people. Under these conditions, commodity money will sooner or later be replaced by fiat money controlled by government. With fiat money, government can and does, as we all see around the world, expand greatly. It makes possible the financing of ever greater government outlays, and this in turn brings what I call collective corruption. By collective corruption, I mean that an ever greater number of people become economically dependent on the financial strength of government. To give an example, people take government-financed jobs, companies benefit from government orders, and even private savers put their lifetime savings into government-denominated bonds. And how will the majority of the people respond to an approaching depression? And a depression would be the natural outcome of initially fiat money-induced boom. In a depression, they can be sure to lose their incomes and their lifetime savings, so they have to shoulder great costs. And having said that, if and when people can even expect to rank among the first receivers of the newly created money, which is actually the case once collective corruption has become sufficiently widespread, the answer appears to be obvious. The majority of the people may expect to benefit from running the electronic printing press. They will prefer the running of the electronic printing press over letting government and banks defaulting. And so under such an incentive structure, the fiat money system would end up in hyperinflation.
But we've seen in things like the Weimar Republic and in Hungary and various other kind of episodes in the past in Argentina and various other countries that hyperinflation leads to the destruction of a society, such as typically in the Weimar inflation in the 1920s. Why would politicians and bankers and even voters risk this, seeing the lesson so clearly laid out in past hyperinflations?
Well, from a theoretical point of view, it is difficult to see that those holding or influencing the fiat money production monopoly would actually want to bring about hyperinflation. By the way, by hyperinflation, I mean a severe debasement of the currency, of the purchasing power of the currency through an expansion of the quantity of money. For hyperinflation would actually destroy government's most effective means for coercive income redistribution from producers and contractors to the non-producers or non-contractors. What I'm saying is that a fiat money regime will bring about, and necessarily so, financial and economic crises. And over time, the fiat money regime will end up in a situation of over-indebtedness, which brings with it the danger of depression. And if and when there's widespread collective corruption, people will consider the running of the printing press as the policy of the least evil.
So the path of least resistance, like lightning hitting the ground from the clouds.
Yeah, you could put it that way.
But we've had a pure global fiat system for 40 years. Now, the people who are behind it would claim that it sparked the computer revolution. It's sparked, although there's been problems in the last couple of years, it's created enormous wealth over the last 40 or so years from the sort of late 60s onwards. Now, given that we have had a global fiat system for 40 years, how has it lasted this long if it's so bad? And another question is, can it last another 40 years?
Well, I would express quite some doubts that today's fiat money system could do another 40 years. And the reason is clearly the level of indebtedness. When the fiat money system took off 40 years ago, with the US suspending the redeemability of the US dollar into gold, overall indebtedness was much, much lower than it is today. After 40 years of fiat monies, the level of indebtedness in most developed countries employing fiat money has become fairly high by any standards, economic standards. And it needs to grow further so that the fiat money-induced boom does not collapse and results in a depression. Of course, there's a risk that if the fiat money regime collapses, meaning that there is a heavy debasement of the purchasing power of fiat monies or its entire destruction, and people do not know why it has collapsed, that a new fiat money regime might emerge. But I would say that there are limits. There are limits which are not suggesting, there are limits to a fiat money system suggesting that it won't take another 40 years.
Okay, now I hate to pin you down to a time frame because you're an Austrian economist, and Austrian economists hate being pinned down to time frames. But if you're right following Mises, we're probably in this depression. We've probably been in this depression for either 4 or 12 years, depending on how you view it. When are we going to hit this hyperinflation? Lots of Austrian economists have been caught up recently by predicting inflation starting last year or this year or the next year or whatever, and it hasn't happened. Why hasn't it happened yet? And when roughly do you think it is going to happen?
Well, so far, central banks have expanded the monetary base, thereby keeping ailing banks afloat. I would say this is the first step towards creating ever greater amounts of monetary debasement. The second step will be running the printing press for keeping financially unsound governments afloat. Once central banks start monetizing outstanding government bonds, by purchasing these bonds from so-called non-banks, they will increase the outstanding commercial bank money aggregates directly, and this is then the transition. So once the monetary aggregates in the hands of the wider public get increased through these operations, I would say it's just a matter of time until prices go up, either consumer prices or in particular asset prices.
We've been seeing banks, though, holding a lot of excess reserves in central banks. Why do you think they would start releasing these excess reserves? What's going to trigger this explosion of prices?
I'm not really sure whether it will be the banking sector that is actually leading this monetary debasement. As I said earlier, central banks can start purchasing government bonds from, let's say, pension funds, insurance companies, even private savers, and thereby sending new money onto people's current accounts held with the banking industry. And this is a way of increasing the money stock directly in the hands of the wider public. And for doing so, the central banks would not even need the lending capacity of the commercial banking industry.
We've seen some people predicting that this year the Federal Reserve is going to basically buy up virtually all US government debt in one form or another. 2013 is an unlucky number for some. The hyperinflationary crash could come this year. Now, if and when it does come, do you think that the governments of the world will get together in a kind of G20 conference and possibly have another kind of Bretton Woods II conference to save themselves? And if they do, how do you think they're going to try to save themselves from this?
It should be clear that the current worldwide fiat money regime is a monetary system in transition, and the current financial and economic crisis testifies, I would say, to this proposition. We do not know how the future monetary architecture will look like, but yes, a system of Bretton Woods III could be a possibility, where governments around the world agree to anchor, for instance, the US dollar in gold, and then fix their exchange rates, their national exchange rates vis-a-vis the dollar within a certain range vis-a-vis the dollar. And governments around the world, presumably greatly supported by the majority of the people, may not even want to agree to ending government's monopoly over money production. And so such an attempt to establish, so to speak, a world currency system, a coordinated world currency system could be the outcome of what politicians have in mind in view of the challenges coming with the current crisis.
And how long do you think that system would last before we move to, say, private monies, sound private monies with 100% reserves? Do you think that system would last 5 years, 10 years, or just collapse instantaneously? Or what do you think would happen if Bretton Woods II came along and backed the dollar with gold again?
You know, as I see it, there is already a kind of revolution going on in financial markets. As you know, there are at least two purposes money serves. One is it serves as a means of exchange, and the second function of money is really to serve as a store of value. And when you look at the prices for precious metals, for instance, you really can see strongly rising prices of gold and silver in virtually all fiat currencies over the last decade. And what it tells me is that an increasing number of people is actually substituting gold and silver for fiat currencies when it comes to making their lifetime savings. And I think this is a very powerful development. And it really shows the declining confidence in the purchasing power of fiat currencies. And looking ahead, once governments want to set up a system of Bretton Woods 3, I think even more people will become aware that something bad is going to happen to their money balances. And so the process of debasing the purchasing power of fiat currencies will gain momentum, I would say. And so even if you end up in a system of Bretton Woods 3, you as a money holder will suffer heavy losses in any case.
Well, what do you think then of the development yesterday on January the 1st, the sort of Basel initiative to make gold kind of an asset on a par with government bonds and cash? Do you think that this could be the step towards a kind of the gold coming in to back fiat currency again?
I'm inclined to think that this measure as such will not have much of an impact. And the reason is banks are privileged, government-privileged institutions. The commercial banks and investment banks have fairly little economic incentives to hold gold. They have actually strong incentives to hold base money balances and government bonds. The issue you're pointing at is certainly very important, because what it could mean is further down the road that the demand for money, and I'm not speaking of the demand for money as far as banks are concerned, but I'm speaking about the demand for money of the wider public, may go down. And this is really something that would or could break the fiat money system. You know, governments and central banks can determine the fiat money supply, but they cannot control the demand for fiat money. And once the fiat money demand declines, it means that people want to hold real assets like gold and silver and housing and stocks rather than fiat money or fiat money denominated bonds. Yeah, this could really then trigger the collapse of the fiat money system, like something, or Ludwig von Mises back in 1923 described it as the crack-up boom. So people just want to get rid of fiat money. The money demand collapses, and so it would either lead to a heavy debasement of the purchasing power of fiat currencies, or even destroy these currencies altogether.
Yes, we're beginning to see an international development, aren't we, for the swapping of gold for oil, aren't we? And oil and gold being traded back and forth rather than paper fiat monies. However, in the shorter term, seeing as you're in Frankfurt there with that big blue statue of the euro, do you think that the Deutschmark's going to re-emerge in the next couple of years or the next few years? And do you think that euro statue in Frankfurt will come down one day?
I'm adhering to this theory of collective corruption. And collective corruption is also prevailing among the German population. And so as things stand, I cannot really see any political initiative, a preemptive political initiative to make Germany getting out of the euro area and replacing the euro with the Deutschmark. Such a scenario, from my point of view, appears plausible after the full damage has become obvious, meaning inflation becomes rampant, the whole coercive redistribution among nation states within the single currency area becomes unbearable, that such political initiative may appear. But at the moment, I think collective corruption, even among the German population, is much too widespread. I wouldn't expect the Deutschmark coming back, replacing the euro.
You said earlier you think that the dollar might eventually get backed by some form of gold. As this is gold money, I've got to ask you your view on the German gold situation. Do you think the German government still has any gold it can lay its hands on physically?
A great chunk of the official Bundesbank gold is deposited outside Germany. This has become criticized recently, and it's fair to say once the trouble starts, it will become increasingly difficult to get hold of these physical gold reserves. And as long as the German gold does not get repatriated into Germany, I'm very doubtful that the Germans really have access to physical gold in times of an emergency.
So when this emergency comes, there's going to be some people who do well through the emergency or who just survive, and some people who don't survive very well. How do you think our gold money listeners could best survive and prosper through this oncoming kind of paper money storm?
Well, and a change in the monetary system accompanied by a great debasement of the currency or even a currency reform will, of course, affect different people to a different degree. When it comes to preserving financial wealth, I think holding gold and even silver is certainly one way, I would think, to weather the storm. When you look at monetary history, paper money has always declined in its exchange value. And if there's one constant in terms of preserving wealth, it is really gold. And so there is, of course, a strong rationale for sticking to gold. But in addition, I think also investing in companies which have a business model that is most likely to survive forthcoming monetary turbulences is another, and I would say, very attractive way of preserving wealth, because a good business will continue to earn a return on the capital invested, irrespective of the purchasing power of money. And so investors will enjoy a compounding effect. That's actually the beauty of any stock investment. This is a good stock investment. And this works in favor of the investor over time. So I think, again, in terms of preserving financial wealth, precious metals and stock investments are key from my point of view.
Are there any particular financial sectors you think are good, or is it just looking for good companies in any sector?
I would look for good business models, irrespective of the industry sectors. Investors should look out for companies that enjoy competitive advantages in their businesses, that have a good track record of decent return on capital rates, for instance. And people shouldn't mind about whether they are in the construction business or in, let's say, in the car industry or whatever. You need companies that have a competitive advantage, and a competitive advantage in particular in businesses that are most likely to survive the monetary storm, as you put it.
Now, 2012 marked a very important year because it was the 100th anniversary of A Theory of Money and Credit by von Mises. Now, you've written a chapter in the Mises Festschrift, which is coming out to celebrate this 100-year anniversary. Can you tell us what your chapter is about in the book?
Yeah, that is a very exciting book, I would say. Professor Guido Hülsmann is the editor, and the title of my contribution is Mises' Theory of Money and Credit, Arguments Against Central Banking. As you know, as you already pointed out, in 1912, Ludwig von Mises published this book in German under the title A Theorie des Geldes und der Umlaufsmittel, which then became translated into Theory of Money and Credit. It's a very, very important book. And when you look through all the arguments he developed and formulated, you really find that he made a case against central banking back in 1912. At a time when there was still a gold standard, it was a time when debt was not an issue as it has become today. And so it's really a very far-seeing argumentation he developed in that book. And he also he recognized the evils that would come, the economic and moral evils that would come with central banking. I think that's a very important message contained in that book.
And do you think central banking will survive what's coming up in the next few years?
We talked about a future monetary architecture. As long as collective corruption remains in place, remains widespread, I think the majority of the people will support government efforts for seeking, let's call it, a system of Bretton Woods III, meaning governments want to keep their grip on the monopoly of money production. But I would say this in turn is a system which is unsustainable. It is, again, a system of a transition. I think there's a good reason to call it a system of Bretton Woods III. What is meant is the system of Bretton Woods I started in 1945 with the dollar backed by gold. And at that time, at least international payments could still be settled into gold. And then on 15th August 1971, the Americans suspended the gold redeemability of the US dollar. Assuming we make progress in the field of monetary affairs, like we have in many other fields of economics, one really has to say central banking and government monopolization of money production is a very primitive architecture. We have learned over time that the market is best at providing goods and services in the best quality at the lowest prices. And we know from theory that money is a free market phenomenon, that it can be established and preserved through the free market forces. When looking from this point of view, it seems that central banking is also a system in transition, which will sooner or later be replaced by private monies.
So do you think I will see private gold money in my lifetime?
Assuming that you're my generation, I think a fairly good chance to see a free market money. However, it will be a bumpy road towards substituting private money for government money. But in the end, I think it will be achieved.
As well as working as an economist in the kind of German banking system, you also run a couple of websites. Can you tell us about how people can find out more about your work in these websites?
First of all, we have set up a Ludwig von Mises Institute in Germany, which contains basically German-speaking contributions in the Austrian tradition. And on the internet, you would find it under www.misesde.org. I have a personal website, which is Thorsten-Polleit.com, where I post my latest articles, give you an overview of my talk, some PowerPoint presentation you find there. And this is pretty much it.
Thank you. Es tut mir leid für meine schreckliche deutsche Sprache, aber herzlichen Dank for your time today. I can't say any more than that. Professor Thorsten Polleit.
Thank you very much for the invitation. It was a great pleasure.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.